We copy trade.
be here with you today for another incredible live session. Whether you've been with us for a while or this is your first time joining, buckle up because we got a jam-packed session full of insights, strategies, and the kind of tips that will take your trading game to the whole new level. Who's ready to crush it today? So let's start. Let's get some love in the chat. Drop your favorite emoji and hit that like button. And let me see where you're tuning in from. Whether it's New York, London, or Tokyo, or anywhere in between, we want to hear from you. The WeMasterTrade community is global, and today we're all in this together. And hey, if you're not subscribed yet, you know what to do. Smash that subscribe button and stay in the loop for all the tips and tricks that will help you level up. Alright, I love the energy already. We got traders tuning in from all over the world, and it's awesome to see everyone coming together to share, learn, and grow. Let's keep that momentum going because today's session is going to be next level. We got some special guests who are here to share their stories and strategies that have helped them rise to the top of their game. So trust me, you don't want to miss a single word. First up, I have the honor to introducing Ralph, an absolute beast in the forex market. Ralph has been mastering forex trading for over 2 years and a half, and he's here to share some seriously valuable insights with all of you. Ralph, how's it going today?
Hey Scarlett, I'm feeling fantastic and thrilled to be here. It's always wonderful to engage with the WeMasterTrade community and discuss the successful approaches I've recently adopted. I'm eager to delve into some of the strategies I've been applying in the forex market.
Well, I love that energy, Ralph. I know our audience is pumped to hear all about your forex journey, but before we get into that, let's not forget our next guest, Helen. Helen's been dominating the fund trading scenes, especially in the high-stakes world of crypto and stock. Helen, how's it going?
Hi Scarlett, I'm equally excited to be here. This session always offers great topic for discussions, and today I'm thrilled to share some of the strategies that have been effective for me in fund trading. It's going to be an engaging session.
That's what we love to hear. So for everyone watching, make sure you got your notepad ready because Ralph and Helen are about to drop some serious knowledge bombs. We'll be diving deep into their experiences, challenges, and the strategies that have helped them thrive in the fast-paced world of trading. Alright, Ralph, let's kick things off with you. You've been trading forex for over a year and a half now, and I know the forex market can be a little bit of a roller coaster. Can you tell us how you got your start in forex trading and what led you choose WeMasterTrade as your platform?
Certainly, Scarlett, I began forex trading about 2 years ago. What captivated me initially was the market vibrancy and perpetual activity. The forex market is exceptionally dynamic, and I was attracted to the concept that there is always potential for success, regardless of the circumstances. When I first discovered WeMasterTrade, it immediately resonated with me as the perfect match. The resources they provide, including sophisticated technical analysis and access to real-time data, truly impressed me. However, it was the community aspect that clinched it for me. WeMasterTrade places a strong emphasis on aiding trader success by offering essential tools and support to advance, regardless of your starting point.
That's fantastic, Ralph. It sounds like WeMasterTrade has really helped you evaluate your game. Now, forex is known for its volatility, and sometimes that can make or break a trader. How do you handle the ups and downs of the market without letting the pressures get to you?
Well, great questions. Volatility can be challenging, but it's also where the real opportunities are. The key is having a solid risk management plan. I always say you have to respect the risk. It's important to stay disciplined, and WeMasterTrade risk management tools help me do that. Their real-time alerts and customizable risk parameters allow me to react quickly but with control. When the market moves fast, you have to stay calm, trust your strategies, and not let emotion take over. And for me, that's where WeMasterTrade feature really shine.
That's some seriously valuable insights, Rap. Managing risk and staying cool under pressure is definitely key in forex trading. Now, Helen, let's switch gears to fund trading. You've been crushing it for nearly 2 years, specializing in long-term strategies. Can you tell us what drew you to fund trading and how it differs from other forms of trading?
Absolutely, Scarlett. Fund trading revolves around strategic long-term growth. It's not about seeking quick win, but constructing a portfolio that can steadily advance over time. What truly distinguishes fund trading is need to consider both short-term and long-term perspective. Careful risk management is crucial while substantially keeping an eye out for emerging opportunities. WeMasterTrade real data and an analysis tool have been instrumental in achieving this balance. They enable me to make well-informed decisions that align my long-term strategy, even when the market presents unexpected challenges.
I love that fund trading definitely seems like it requires a lot of patience and foresight. Helen, how do you stay focused on the bigger picture, especially when the market gets rocky?
Patience is paramount in fund trading. The market experiences fluctuations, but the short-term up and down shouldn't dictate your long-term strategy. A crucial lesson I learned is to maintain emotional detachment. Don't get overly excited when things are going well and don't panic when the market dips. We want to take risk management tool asset me in staying disciplined even during volatility. I can set reside risk parameter and have a peace of mind knowing that I'm not overexposed even when the market behaves unpredictably.
That's such solid advice. Keeping your emotions in check is definitely a big part of being successful in trading. You both have shared some serious gems so far, but let's talk about the tools that have helped you to get to where you are today. Raf, can you share one specific feature on WeMasterTrade that's been a game changer for you in Forex?
Definitely, a tool I absolutely rely on is the account insight features. It offers up to the minute data on how my account is performing, and I use it to observe.
For me, especially in volatile market like crypto, WeMasterTrade help me stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with. That's what keeps me grounded even when the market is going wild.
Risk management is so important, especially in today's fast-moving markets. Whether you're in Forex or fund trading, having a right tools make the world of difference. I hope everyone takes notes because today, Raf and Helen are dropping some serious broad level insights today. Well, alright traders, we kick things up with a notch because it's time to dive into one of the most powerful features here at WeMasterTrade, the package comparisons. Whether you're a fast-paced newbie eager to get your feet wet or a seasoned pro looking to scale your game to a new heights, this segment is for you. This is where you'll find the perfect trading package to match your goals and take your trading from good to great. Now, let's be clear, here at WeMasterTrade, we know there's no one-size-fits-all in trading. Every trader is unique with different styles, risk tolerance, and strategies. That's why we offer multiple customizable packages to meet you exactly where you are in your trading journey. Whether you're aiming for high risk and high rewards or you prefer steady, methodical approach, there's something here for you. Well, to break it all down, I got the awesome Raf and Helen, two of the WeMasterTrade trainers. They both work closely with these packages and are here to give us the inside scoop on how to leverage each one to its full potential. So, if you're ready to find out what package will take your trading game to the next level, let's jump in with Raf. You've been with WeMasterTrade for a while now and you're seeing firsthand how these packages can evaluate a trader's experience. Can you kick things off by walking us through how both new and experienced traders can benefit from the package comparison? And why is it such a game-changing feature in the WeMasterTrade experience?
Absolutely, Scarlett. I really enjoy discussing the packages because it's where traders can truly customize their experience. The package comparison feature simplifies the process for traders to understand precisely what they are getting. When you visit the website, there's a detailed comparative overview of each package that includes information like the initial balance, profit targets, die loss limit, and more. All the essential details are presented in a straightforward, easy to navigate table. It all structures to assist traders in selecting the best tool for their success. So let's talk about the standard package, one of the most popular options. This one is great for traders who got some experience and are ready to level up. You start with an initial balance of up to 200,000, which gives you plenty of room to trade confidently and make strategic moves. The profit target is set at 6%, which is perfect for traders aiming for steady, sustainable growth, and the die loss cap is 4%, so you got enough breathing room to drive down market swing without stretching too much. It's an awesome balance between opportunity and security.
Well, that sounds like a perfect stepping stone for traders looking to level up without jumping too deep too quickly. A $200,000 balance and a solid 6% profit target give you tons of flexibility to build momentum. But for those who are looking for something a bit more thrilling, let's talk about the 5-10-10 package. Rap, I hear this one's a favorite for high-risk, high-reward traders. What makes the 5-10-10 such a standout?
The 5-10 package, now we are talking big plays. Like the standard package, you start with 200,000, but this package is for those traders who are ready to take on bigger risks for bigger rewards. The die loss cap is 5%, giving you more flexibility in how you handle the market. But here's the kicker, the profit target jumps to 10%. This is perfect for traders who have confidence in their strategies and are looking to make those major gains. It's all about having a higher tolerance for risk in exchange for bigger payouts.
Now that's what I'm talking about, a 5% loss cap and 10% profit target. That's typically for traders who aren't afraid to go big and swing for the fences. But what if someone's looking for something more relaxed? Maybe they want something simpler without all the pressures of hitting specific profit targets. Helen, I heard about a 5-10-0 package. Can you break it down for us?
Absolutely, the 510 euro package is the ideal for the trader who wants a straightforward, no-nonsense approach. You start with a 100,000 balance, but here's the cool part. There is no profit target. You can trade freely without the stress of hitting specific percentages. It's just you, the market, and your strategy. The daily loss cap stays at 5%, giving you some structure, but the beauty here is that it allows traders to focus on consistency without worrying about specific growth.
Wow, that sounds like a dream for traders who just want to trade without all the restrictions. Total freedom, no pressure, just you and the market. Now, Helen, what about those traders who want a bit more control over their risk management but still want to play in the high-stake arena? What can you tell us about 5-10-10 no PC package?
Oh well, the 510 no VC package is perfect for traders who want more control over their trades. You still get the 200,000 starting balance and the 5% daily loss cap. But here the flexibility is the real selling point here. This package allows you to trade and adjust your trading parameter to match your style and risk management preferences. Whether you're reacting to the market changes or want to experiment with a different strategy, this package gives you the freedom to adapt without losing the safety net of risk management.
Flexibility and control in a volatile market, that's huge. I love how these packages are giving traders more way to adapt and grow. Now we cover a lot, but I've been hearing whisper about something really special, the custom package. Rap, can you tell us what makes this so exciting?
Okay, the custom package is where things get really exciting. This is for traders who want it on, full control, full customization, and a massive starting balance. You get a jaw-dropping for 100,000 initial balance, yes, for $100,000. But that's just the beginning. The real beauty here is that you can customize everything. Die loss limit, overall loss limits, and even your profit target. It's perfect for traders who know exactly what they are doing and want to craft a trading experience that matches their exact needs. It's the ultimate in freedom and control.
400,000 starting balance and the ability to customize your entire trading experience. That's next level trading. Whether you're a risk taker or a methodical trader, the custom package sounds like the ultimate playground for those who want to take their trading to the stratosphere. Alright, traders, let's quickly recap. Whether you're just starting with the standard package, going for bigger rewards with 5-10-10 package, enjoying full freedom with 5-10-0, taking control with 5-10-10 no PC, or customizing everything in the custom package, WeMasterTrade has the perfect options for you. The only question is which one is calling your name. Head over to the package comparison section on our website right now and check it out for yourself. We got packages designed to fit every trader no matter where you are in your journey. Let us know in the chat what package speaks to you, and our team is ready to help you get started. The future of trading is in your hands, so let's make it happen. Alright traders, this is where the magic happens. We talk about the packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the packaging tools. It's also about understanding and sticking to the rules. The conditions we set at WeMasterTrade are designed to not only keep you safe, but also help you grow and take your strategies to the next level. Not whether you're just getting started or you've been trading for years. Well, these conditions will act as your roadmap, so let's dive into the rules that define our trading environment, because if you understand the rules, you can master the game. First up the list, and arguably one of the most important, the daily loss limit. Helen, you've been through it all, the highs and lows. Can you kick things out by explaining to everyone how this daily loss limit works and why it's so crucial for managing risk?
Absolutely, Scarlett. The daily loss limit is one of the most essential protection any trader can enjoy. It's sort of a daily circuit breaker to prevent you from suffering significant losses on a challenging day. The concept is straightforward. There is a limit to how much you can lose in a single day of trading, and it's determined by the greater of two values, your account balance and your equity at the beginning of the day. Okay, let me break down with an example so everyone understands it clearly. For the first example, let's say you got a balance of the 105,000, but due to some open trades, your equity, including flowing, profit and loss, either 107,000 at the start of the day. If you're working with a 4% daily loss limit, that means you can lose up to the 4,000. And if your equity falls below the 103,000, you don't trading for the day. For the next example, on the flip side, if your balance is 100,000 and your equity is 99,000, the same 4% loss limit could mean your account would be liquidated if your equity dipped below 96,000. The point is, the daily loss limit is there to make sure the bad day doesn't rip you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger the next day.
Got it. So it's like an insurance policy for your trading day. You hit that limit and boom, you're out before things get out of it. But what happens if a trader accidentally crosses that line? Can they keep trading?
Well, great question, Scarlett. And no, if you breach the daily loss limit, your account is automatically liquidated. All your open position will be closed and you won't be able to trade again or unless you buy a new trading package. So here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses, but here's a word of caution. Market fluctuation can sometimes cause you to lose a bit more than the limit, depending on how fast the market is moving.
So is the hard stop definitely something traders should keep an eye to avoid too? So now that we understand what the daily loss limit is and what happens when it's hit, the next question is how to avoid hitting that limit in the first place. Helen, you've been in the trading trenches for years. Can you share some practical strategies that traders can use to stay within their daily loss limit with all ears?
You got it, Scarlett. Staying within the daily loss limit is all about being disciplined and following a solid risk management plan. Here are a few key strategies that have worked wonderful for me and countless other traders. The first, and I can't stress this enough, always use a stop loss. I know it sounds simple, but is absolutely critical. The stop loss ensures that if the market moves against you or you're out of the trade before things get out of hand, think about it as safety net.
That's like setting up guardrails on a mountain road, right? It's there to stop you before you go off the cliff.
A solid scarlet is that extra layer of protection. Now the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you will still far from hitting your die loss limit, and you can keep trading without any major setbacks.
So it's like building your defense. You don't put everything on one plate, right? You spread out the risk. Makes sense. But what about those moments when traders feel tempted to trade after their losses, trying to get it all back in one trade?
Oh, that's a big one, Scarlett. Chasing losses is one of the biggest mistakes traders make, especially newer ones. This brings me to my third strategy. Don't chase losses. If you're having a tough day, take a step back. The market will only be there tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you have hit that die loss limit and you're out for the day.
So true, it's like trying to sprint when you're already blinded. You're more likely to make a mistake. Now, Helen, this strategy sounds spot on, but how do traders stay mentally strong when things aren't going their way? What keeps them from falling into that emotional trap of chasing losses?
It's not about mindset, Scarlett. Trading is just a mental game and it's a number game. You gotta stay calm and focused. One trick is always to have a trading plan before you even play a trade. That's why when the thing gets tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop, take a break, step away from the screen and reset your mindset.
Thank you, Helen, for those incredible tips on managing the loss. Now let's shift our focus to another critical element of risk management, the maximum loss limit. This limit is where it's like a long-term safety net, ensuring that you don't deplete your account over time. Apply the daily loss limit, which resets at the end of each day. The maximum loss limit is cumulative. When you reach it, your account will be locked and your trades will be closed. To dive deeper into this, let's discuss how the maximum loss limit works and how it's calculated and why it's essential for traders at every level. Whether you're a new trader looking to minimize risk or an experienced trader scaling your strategies, this limit ensures that you don't go beyond a point of no return. Ralph, I know you got some great insights into the mechanic of the maximum loss limit. Could you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Of course, Scarlett, the maximum loss limit is a vital rule that's often overlooked, but extremely important. Essentially, it's meant to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures your account equity never falls below 94% of its initial balance. So if you start with a balance of 50,000, your account will be closed when your equity falls to 47,000. That's a total allowable loss of $3,000. However, it's not all bad news. If you start making profit, the limit adapts, giving you more freedom room as your equity grows. For example, if your account balance increases to 52,000, you now make 2,000 in profits, and your new maximum loss limit would then allow you to lose up to 5,000, as you're essentially locking in those gains. So the maximum loss limit acts as a long-term savior. It's designed not only to protect your account but also to encourage disciplined trading by setting boundaries. The goal is to ensure you don't dig yourself into a hole that's too deep to recover from. So here are a few specific examples. First one, let's say your account balance starts at 50,000, but your equity dropped to 49,000 due to some market losses. You are allowed to lose another 2,000 before your account hits that critical 47,000 and is automatically closed. Now, if you are doing well and your equity rises to 51,000, you got some extra cushions, and at this point, you are allowed to lose up to 4,000 before your account hits the same 47,000 limit. So to figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed positions and factoring in any open position that are still running. Your trading dashboard will show two key metrics: the max permitted loss, which is how much you are allowed to lose overall, and the remaining loss, which is the loss left before your account is closed. Now, what happens if you hit that limit? Well, unfortunately, if your equity hits the maximum loss limit, the system will automatically close your account for the day, and all your open position will be liquidated, whether they are profitable or not, and you will be unable to trade for the rest of the day. To resume trading, you will need to budget a new trading package.
Thanks, Rob. That's definitely key. A house clarify the nuts and bolts of the maximum loss limit. It's kind of like a safety feeling out of control, especially when the markets get volatile. Now I do this in different ways. Whether you're a cautious trader who keeps their risk low or a more aggressive trader trying to maximize profits, this limit is one of those things you can't avoid. So let's bring Rab, our risk management expert. Rab, what do you think are the most common mistakes traders make when it comes to managing their maximum loss limit? And more importantly, what strategies can traders implement to ensure they never get too close to it?
Well, great question, Scarlett. You are absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that speak up on traders who are paying attention to the long-term pictures. And I would say the most common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies I recommend to stay well within your maximum loss limit. First of all, set stop loss orders. This is your first line of defense. Setting a stop loss means you are deciding in advance how much you are willing to lose on a particular closed trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're only willing to lose $500 on a particular trade, you'll set that as your stop loss and you won't have to worry about it spiraling.
I love that. It's like putting a safety belt on each trade. Once you're locked in, that stop loss is out of your hands.
Exactly, Scarlett. It's all about disciplines. The next one is manage your position sizing. This is a big one. Often, traders, especially newer ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a large percentage of your account if the trades go south. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is 50,000, you should only risk around 500 to 1,000 per trade. This keeps your potential losses manageable and well within your limit.
That makes total sense. You're not putting all your eggs in one basket, and it gives you more room to breathe, right?
Exactly, it's all about spreading the risk so you don't have to pick up a hit on any single trade. The next one is monitor your account equity regularly. This may sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market highs and lows, but you should always be aware of how close with your dashboard may it too easy to check your remaining loss, and so use it. If you see that you're getting close to the limit, it's time to take a step back and re-evaluate your strategies.
It's almost like watching your fuel gauge. You don't want to be driving on fumes without knowing it.
Exactly, and no one wants to get stuck on the side of the road. The next strategy is create and stick to a trading plan. Having a well thought out trading plan is one of the most powerful tools in a trader arsenal. This plan should outline not only your profit goal but also your risk management rules. For example, if you have a few losing trade in a row, does your plan tell you take a break, reset, or change your strategy? The idea to have a necessary approach so you don't make impulsive decisions in the heat of the moment.
It's like having a roadmap, right? You know where you're going, you have contingency plans for things when don't go as expected.
Exactly, the market can be unpredictable, but the solid plan keeps you grounded. The next one is regularly review and adjust your strategy. Even the bad laid plan needs to be reviewed and checked from time to time. If you find that you're approaching your maximum loss limit too often, it may be a sign that your risk management strategy needs adjusting. Maybe you need to tighten your stop losses or reduce your trade size. The key is stay flexible and adapt to changing market conditions while always keeping your risk in check.
That's great advice, Helen. Helen is all about constant improvement. You can't just sit in and forget it. You got to be ready to adjust based on your results and the market.
Absolutely, trading is dynamic and your strategy should be too.
Thank you for the fantastic breakdown of the maximum loss limit, Rev and Helen. This leads us perfectly into our next key topic, the profit consistency rule. This rule is critical for ensuring long-term sustainable success in trading, and as it helps measure and maintain consistency in your profits. Now, to give us a clearer picture of how the profit consistency rule works and why it's important, let's turn to Rev. Rev, can you break down the rule for us? How is it calculated and why is it important for traders to focus on the consistency rather than just aiming for big wins?
Of course, Scarlett, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on one or two good days, it's about being consistent day in and day out. So here's how the profit consistency rule is calculated. You take your highest single day of profit and divide it by the total on your profits and losses over a given period, usually a month or quarter. You then express the results as a percentage. Let's go through an example. Say your best day brought in $200 in profit, but over the month, your total profit and losses add up to $410. In this case, your profit consistency ratio would be about 48.7%. This ratio shows how much of your performance comes from one standout day. Ideally, you want this 20% because under 20% because that means your profits are more evenly spread out across on your trading days. Now, why is this important? A low profit consideration indicates that you are not just relying on a couple of big wins to stay profitable. Instead, you are showing that your strategies work consistently over time, and even on those days when the market isn't giving you big wins. This kind of consistency is the hallmark of a successful long-term trader.
That's great explanation, Rev. So just to clarify, a lower ratio means you're more likely to make steady gains rather than being overly dependent on a few good days, right?
Exactly, Scarlett. When you are too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you are not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and that your trading is more predictable and stable over time.
That's incredibly insightful, and it seems like a critical metric for any trader who's serious about long-term success, right?
Exactly, consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses for a long period of break-even trading, it's hard to maintain momentum. With a profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
Awesome, now that we got a solid understanding of what the profit consistency rule is, let's dig into some practical strategies to help traders maintain a low ratio, ideally under 20%. Helen, I know you got some great tips for us. Can you walk us through how some techniques that traders can use to stay consistent and ensure their ratios stay in check?
Absolutely, Scarlett. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rare big wins. One of the most effective strategies to keep your profit consistency ratio low is to diversify your trades. This means spreading your investment across different markets, asset classes, or even trading strategy. If you only trade one market, say forex or stock, you risk being too reliant on that market performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
That makes a lot of sense. So before we move to the next stage of the live session, we will have a little break.
Trade.
Welcome back with WeMasterTrade, and next up we will move on to the next strategies for the profit consistency rule. So the question is, if I'm only trading in, let's say, the US stock market, a bad week could really hit my profit consistency hard. But by adding trades in, for example, commodities or forex, I could balance out some that risk, right?
Exactly, Scarlett. It's all about balance. When one market isn't performing well, another market may doing better. This way, your overall performance stays smoother, and you are not relying on just one or two trades to pull you through. Next up is position sizing. One of the biggest mistakes traders make is over leveraging. Taking on a position that are too lack relative to their account balance. For example, if you have a 10,000 account and putting the 5,000 into a single trade, it risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position size more and manageable, say no more than 1 to 2% of your account balance per trade. This reduces your risk and help ensure that losses don't overwhelm your profits.
Right, so it's not just about picking the right trades, but also making sure you're not putting too much of your capital at risk on any single trade. Smaller, more controlled trades lead to steadier results over time, right?
Exactly, by managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in emotion of trading, whether that's the excitement of a potential win or the panic of a sudden loss. A solid plan outlines exactly when you enter trade, when you're exit, and how much risk you're willing to take. Having a this rule in play keeping your balance and help ensure that your trading decisions are consistent, which in turn have keep your profit consistency ratio in check.
That's a really cool point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making emotional decisions, right?
Absolutely, Scarlett. It's so easy to get emotional in the heat of the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trade that could hurt your performance. This brings us to stop loss order. A stop loss is an automatic asset that you set up to close a trade if it moves against you. This helps to cap your losses on any single trade and protect your account balance. By using a stop loss order, you can avoid the catastrophic losses that can screw up your profit consistency.
I like the idea of using stop loss orders. It sounds like a way to take the emotion out of decision-making process.
Exactly, it's like setting up a safety net. Once a stop loss is in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss takes you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. Another important strategy is to regularly review your performance. Just because you set up a solid plan and a strategy doesn't mean you should put everything on autopilot. It's crucial to check your trade, see what's working, and make adjustments as needed. You may find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So it's like performing maintenance on your trading strategy, always looking for ways to optimize and improve.
Exactly, just like a car needs regular tune-ups, your trading plan does too. Continuous improvement is key to keeping your profits steady. Finally, and this is a big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotions can lead to a poor decision making. If you stick to your strategies and avoid chasing losses or getting overly excited after a good day, you will see much more consistent results.
That's such an important point. Staying calm and disciplined even when the market is going crazy is easier said than done though, right?
Well, it definitely takes practice, but staying level-headed is crucial for long-term success. If you can control your emotion and stick to your plan, you will be far more likely to maintain consistent profit.
Alright traders, let's dive into a crucial aspect of expecting trading, the risk consistency rule. This rule is key to maintaining both stability and long-term profitability in your trading account. Ralph, I know you got a great way to explaining it. Can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Scarlett. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents loss swing in your equity and helps it mitigate the risk of significant losses due to sudden market movement or unexpected events. So let's break it down a little more. First of all, maximum risk per trade idea. You shouldn't risk more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in on potential exposures. Trade idea definitions. Multiple trades on the same asset in the same direction are considered single trade ideas. On the other hand, trades on different assets or in different opposite directions are treated as separate ideas. For example, if you open several positions on gold mine, they would count as one trade idea and the combined risk must remain under 2%. But if you have a gold mine and a GBP/GPY sell, they are treated as two separate ideas, each with their own 2% limit. Following these rules smooth out your equity curve, encouraging disciplined trading, and more importantly, reducing the chances of massive losses.
Thanks, Rad. That's really helpful overview. Now let me throw this back to our audience for a second. Traders, have any of you ever found this tricky to stick to the risk consistency rule? How does it feel to have the risk limits in place? Does this ever get in the way of your trading strategy?
Absolutely. The main points to remember about the risk consistency rules, there are three main points. First of all, risk per trade is stick to risking no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensure you don't risk too much on any one trade. The next one is single trade idea. If you're owning multiple trades on the same assets and in the same directions, they count as one trade idea, so your combined risk must stay within the 2% limit. Then the last one is separate trade ideas. Trades on different assets or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. So why does this matter? First of all, it's stabilizing your equity curve by preventing huge swing in your account balance. Next is promote discipline by encouraging traders to think more carefully about their risk. And lastly, more importantly, it reduces the risk of major losses that can really hurt your overall performance. So in short, adhering to the rule help keep your trading account safer and support long-term success.
Well, great graph. Now I know some of you might be wondering how to make sure you actually stick to this rule list. So let's shift gears and get into some practical strategies for making it easier to follow. Helen, could you share a few tips on how traders can stay disciplined and avoid breaking the risk consistency rule?
Of course, Scarlett, sticking to the risk consistency rule takes some planning and discipline, but it's totally doable with the right strategy in play. Here are a few key tips. For the first one, define risk limit. First and foremost, clearly set your maximum risk per trade to stay within the 2% limit. You can use risk management tool or calculator to help with it. Most platforms have a built-in tool that allow you to automate risk limit.
That's a good point. Having that automation takes a lot of pressure off, right? No need to constantly double check. Your platform does the heavy lifting.
Exactly, it makes it so much easier to stick to your risk limits when the platform is handling the number for you. The next step is the monitor position sizing. It's also important to keep track of the total risk across multiple trades on the same asset. For instance, if you open several positions on gold buy, make sure the combined risk for all those trades doesn't exceed 2%. This is where the traders sometimes slip up. They open multiple positions without realizing that combined, they are risking more than they intended.
So even though the trades are technically separate, if they are on the same assets, you got to look them as one entire entity, right?
Exactly, Scarlett. Treat them as one idea because they are exposed to the same market movement. And the next one is separate trade idea. Speaking of different trade, it's equally important to trade on different assets on or in opposite direction as separate trade idea. This way you can manage the trade risk individually without exceeding the 2% rule of only single trade.
Right, so you could be running a gold buy and a GBP sell at the same time without violating the rule as long as you manage the risk for each one separately.
Exactly, just make sure you're keeping an eye on your risk for each idea individually. The last one, your risk management tool. I also recommend using the risk management feature that many trading platforms offer, like automatic position sizing or stop loss orders. This tool can help control your exposure and prevent you from overextending your risk.
And I imagine these tools really help prevent those moments when you tended to take on too much risk in the heat of the moment, right?
Absolutely, it takes the emotion out of the equation and help you stay disciplined. And lastly, make a habit to regularly review your trading activity. This is something a lot of traders neglect. Reviewing your trade helps ensure that your risk per trade remain within the set limit. And if you notice any pattern or area where you're taking too much risk, you can adjust your strategy to stay compliant.
It sounds like regular check-ins are crucial to spotting potential issues before they become big problems.
Exactly, Scarlett is all about staying proactive.
Great tips, Helen. Now I'd like to move on to an important update regarding how we handle risk consistency rule violations. Well, if an account is terminated due to breaking this rule for the first time, except for those on the no BC package, there are now two options available for customer. First, they can reset their account if initial balance, which gives them a fresh start. Alternatively, they can choose to reactivate their current account, keeping the existing balance and setting intact. So I think that's covered it. Let's make sure we're applying these risk management strategies and taking advantage of new options available for account management. Thanks, Rav and Helen, for your insights. Well, next we're going to walk you through our streamlined payout process. At WeMasterTrade, we will be making it as easy as possible for you to assess your hard-earned profits. We offer various options to receiving your payouts, including bank transfer, PayPal, and cryptocurrencies like USDT. The choice is yours, ensuring flexibility and convenience.
Our payout process is both fast and secure. After you have made a profit and met the payout requirements, you can simply log into your account, request a payout, and follow the on-screen instructions. Our team will process your request promptly, and in most cases, you can expect to receive your fund within 24 hours. It's that simple. And if you have ever run into any issues or have questions about your payout, our customer service team is always here to help. You can reach us via live chat, email, or through our support ticket system on the website. We are committed to ensuring a smooth and hassle-free experience for our traders.
Transparency is a key part of our philosophy, and that's why we are always here to answer any question you might have about your account or the payout process. Feel free to ask in the comments, and we'll address your queries as we go. Next up, we will introduce with you one of our very powerful tools, the financial instrument list of WeMasterTrade. I hope that Helen could help us understand more about this.
Of course, here at the simple overview page of WeMasterTrade, you can explore a comprehensive list of financial instruments available for trading, including cryptocurrency, forex, stock, metal, energy, and indices. On this page, you will find detailed specification for a trading symbol, including contract size, margin percentage, leverage option, and commission detail. It's important to note that due to the market fluctuation, some symbols may not always be available for trading.
Thank you, Helen. So our vision is to foster a truly community to elite professional traders. Positioning WeMasterTrade.com has the go-to platform for anyone serious about advancing their trading career. Whether you're just getting started or have years of experience under your belt, we're committed to providing opportunities and resources that help you succeed at every stage of your trading journey. At WeMasterTrade, we understand that each trader's needs are different, and we're here to support you with tools, insights, and personalized packages that cater you to your specific trading goals. So, and if you're ready to take your trading to the next level, you definitely want to stick around to hear about the exciting offers we got lined up. The new promotion plan we'll be unveiling today is specifically designed to help traders get more out of their experience with WeMasterTrade and WeMasterTrade.com. We focused on creating more opportunities for growth, increased profitability, and long-term success, no matter where you are in your trading journey. Alright, for our traders who looking for ways to keep more of your profit, well, today we have an exciting update that will help you increase your earning without changing your trading style. It's all about boosting your profit split by simply choose the right funding package. And Helen will break it all down for you.
Well, this new update is something that every trader should know about. When you put in the effort to grow your account, wouldn't it be amazing to actually keep more of what you earn? Well, now, with the new profit sharing board, that's exactly what's happening.
Absolutely, Helen. I know that one of the most common frustrations in trading is feeling like your hard work isn't rewarded enough. But now with these bonus profit sharing features, you can actually increase the percentage of profits you keep. It's a total game changer.
Alright, let's get straight into the details. Here's how you can push your profit split and earn more. When you invest an instant funding package over $175, you will get 1% bonus profit sharing. With over $350, you will get 3% bonus profit sharing, and with over $500, you will get 5% bonus profit sharing. Now, Helen, can you help break this down with a real example?
Of course, let's take a look at the 500 in funding package. Normally, with the instant funding, you start with a 50% profit share, meaning that for every 1,000 in profit you make, you get 500. But with the new promotion, when you choose a package over the 500, your profit share jump from 50% to 55%. That means instead of you taking home 500 from that 1,000 profit, you now keep 550. And why does might seem like more than at first? Think about how much that adds up over time, especially for consistent trader. So in short, the bigger package, the bigger your profit share boost.
Exactly, Helen. And traders, here's why this is such a smart move. Let's say you are someone who trades consistently and makes 5,000 in profits over time. With a standard 50% profit share, you will walk away with only $2,500. But with the 55% boost, you will now keep around 2750,000. That's an extra $250 in your pocket for simply choosing the right package. And the best part, there's no extra effort required. You don't have to change your strategies or take unnecessary risks. All you need to do is select the higher funding package and you will instantly start earning more from the same trades.
Now, some of you might be wondering why is this such a big deal for traders. Let's hear from Helen on this.
As trader, our goal is always to maximize return while minimizing risk. The best way to grow your account is to keep reinvesting your profit. But that's only possible if you get a bigger share of what you earn. With a higher profit share, you can scale further, compound your earnings, and have more capital to work with your next trade. Think about it. If you are keeping a larger percentage of your profit, you have a more flexibility to diversify your trade or try new strategy even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, these more percentage increases add up to the thousands of extra dollars. So, if you are someone who takes trading seriously, this is a huge opportunity to level up your earnings.
That's such an important point, Helen. And from a psychological perspective, knowing that you are earning more with trade can actually help you stay disciplined and focused. Instead of overtrading or taking unnecessary risks to hit bigger profits, you can trade smarter because you are already keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more traders take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
Alright traders, you heard it from the expert. This bonus profit sharing offers your strengths to increase your earning without changing your trading style. All you need to do is choose the right funding package and you'll instantly boost your profit split. Visit WeMasterTrade.com now and grab your instant funding package.
And guys, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easiest way to maximize your return. If you're serious about your trading journey, this is no-brainer. Don't wait too long because opportunities like this don't come every day.
Alright traders, let's talk about one of the hottest offers available right now, the WeMasterTrade BOGO event. This isn't just a discount on a little bit, it's a game changer for traders looking to scale their accounts with zero extra cost. Can you break it down for us?
Absolutely, Scarlett. The BOGO event of buy one, get one is one of our most generous promotions to date. So here's how it works. When you buy a $175 account or higher, you will get a free $10,000 instant account. When you buy a pre-$40 account or higher, you will get a free $25,000 instant account. And when you buy a $650 account or higher, you will get a free $50,000 instant account. So essentially, when you budget an eligible instant funding package, you are doubling your trading assets without spending an extra cent.
And let's be real, that second account can do so much for you. Or maybe you want to try different strategy. Maybe you want to split your trade between conservative and aggressive setup. Or maybe you just want a safety net in case one of your account hit roll down. Either way, you now have a more capital, more flexibility, and more opportunity.
I love that, and this isn't a promo that makes you jump through hoops, right? The BOGO account is automatically issued after a qualifying purchase, isn't that right, Ralph?
That's right, Scarlett. Once your purchase is confirmed, our system automatically issues you a bonus account. No hidden step, no waiting periods. It's quick, seamless, and incredibly trade-friendly.
And here's the cool part, WeMasterTrade allows you to combine BOGO account up to 100,000 in total funded capital. That means if you're a serial trader looking at scout, you can stake this account to trade even larger.
That's huge, but let's talk terms. There are a few rules to keep things fair and balanced, right?
Right, so here what you need to do. The next one is Google account allow one payout after you claim your first profit. That account is complete. Only one active Google promotion per trader at a time. When you complete your Google phase, you're eligible for a new one. And the last one, Google account must adhere to the same trading rule as a standard instant funding account. That means data loss, maximum loss limit, and profit targets are still applied.
So, how do you make the most of it? Well, you could use your main account for your try and true strategies, and the Google account to experiment with something new. Trying gold scabbing, near breakout trading, or running an EA on one and manual trading on the other. You've got options, and that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with a more rules-based approach on the other. This creates a controlled environment for skill development. It's ideal for traders who are looking for become more consistent and take risk model under real-time funded conditions.
So to recap, with the BOGO event, you can get an additional funded account for free instantly with the potential to scale all the way to $200,000. You diversify, test, trade smarter, and profit more, all while WeMasterTrade covers the risk.
And if you're just starting out, it's the perfect way to get two chances to success instead of one. You get to refine your discipline, test consistency, and under platform better, which require experience and your additional cost.
Exactly, we designed the BOGO promo with growth in mind, not just profit, but development. It's a tool for building skills, scaling accounts, and increasing opportunity for every kind of trader.
And remember, the BOGO event is only available for a limited time, so don't miss the window to multiply your opportunities. Whether you're trading full-time or still learning the ropes, this is the offer that lets you move forward with confidence. Thank you, Raf and Helen, for those valuable insights. It's clear that these promotions are tailored to provide maximum benefit, whether you are novice or a seasoned trader. At WeMasterTrade, we are committed to supporting our traders at every stage of your journey. Remember, these offers are currently available, but they won't last forever. So make sure you take advantage of them while you can. And if you have any question about these packages or need further assistance, our customer service is always here to help. Just reach out process. Before we move on to the next segment, we want to remind everyone engage with us in the comments and let us know which promotions you are most excited about or any question you may have about our offerings. And we're here to help and make sure you have all the information you need to make informed trading decisions. So next up, we got something incredible to share with you today, the beginner-friendly challenge from WeMasterTrade. This program is your gateway to leveling up your trading game, getting funded and earning 90% profit share.
Absolutely, Scarlett. This challenge is a game changer for traders who want to hone their skills and start trading with real funds. It's designed to be accessible for everyone, no matter their experience level. So if you are tuning in today, you are about to learn how you can take your trading to the next level. Let's dive into the detail and show how this program works step by step.
The WeMasterTrade challenge is designed to help traders hone their skill and get funded without risking their own money. Participants start by trading with virtual funds on the MT5 platform. Raf, can you share more details about the account option available?
Of course, Scarlett, one of the best things about this program is its flexibility. You can select an account size that suits your preferences, ranging from $5,000 to $100,000. This range ensures that whether you are testing out strategies or aiming for higher stakes, there's an option for you. And don't forget, as you progress, there's opportunity to scale up your account size. Plus, these accounts are designed to mimic real-world conditions, giving you a realistic trading experience from the start.
That's right, and the structure of the challenge make it all more exciting. There are two phases to complete. Phase 1 focus on consistency and follow the risk management rules, which are the key trait of a successful trader. It's about providing that you can trade profitably while adhering to set parameters such as maximum daily drawdown and overall loss limit. This phase emphasizes discipline, which is essential for long-term success.
And phase 2 is where things get even more exciting. In this phase, you demonstrate your ability to generate profits while still maintaining the disciplined habit you have developed. The criteria are slightly more relaxed compared to phase 1, but the focus on steady, consistent gains remains. It's all about showing that you can handle the pressure of trading while staying within professional standards.
And here's the reward. Once you successfully complete both phases, you run real fund to trade with. The profit share model is incredible generous. You earn 90% of the profit you generate. Imagine turning your trading skill into real, sustainable earning with a high profit share. It's a level of trust and opportunity that's hard to find elsewhere.
Another thing to note is that WeMasterTrade Challenge is designed to teach you valuable lessons about risk management and trading psychology. By participating, you're not just earning an opportunity to trade with real funds, you're also building a strong foundation for a successful trading career. It's a win-win for traders at every level. Let's talk about the standout feature that makes Challenge so unique. Raf, can you highlight the variety of instruments available?
Of course, one of the biggest advantages is in the diversity of trading instruments. You have access to over 300 symbols, including foreign, stock, and cryptocurrencies. This variety allows you to test and apply different strategies across multiple markets. It's perfect for traders who want to diversify their portfolios and gain experience in different market conditions.
And speaking of strategy, the challenge supports unlimited approaches. Whether you prefer scalping, automatic trading, and new trading, or even copy trading, the platform accommodates it all. The flexibility means you can stick your strength while exploring new methods if you wish.
Another incredible feature is that WeMasterTrade covers all trading losses. This removes a huge barrier for many traders, allowing them to focus on learning and improving without the fear of losing their own capital. Plus, WeMasterTrade copies your trades to live markets, ensuring that your skill and strategies are put to real-world use.
And for those of you who want to skip the steps and jump straight into trading with real funds, WeMasterTrade offers instant funding products. These are designed for experienced traders who are confident in their abilities and ready to start earning immediately. It's a fantastic option for those who want to fast-track their trading journey.
Thank you, Raf and Helen. Next up, we will move to the news calendar of today.
Let's start with the UK. The BCL retail sales come in much lower than expected, just 0.6% year over year.
That's a sharp drop from a previous 6.8%. Looks like UK consumers are really tightening up.
Cutting and cooling inflation, we might keep in the BOE on pause longer.
The next event AGVY M2 money stock. Japan's M2 money supply is steady at 0.6%, no surprise here.
No major market reaction is better from this and is still worth tracking for the long-term liquidity trends. The next event is AUD Western consumer sentiment. Australia consumer sentiment cooled down to 0.5%, that noticeable pullback.
Yep, the pessimistic consumers usually mean weaker spending, not great for AUD bonds to date. The event at 8:30, NAB business confidence. On the flip side, business confidence rose from -1 to 2. That's a good news.
Positive, yes, but still low overall. Australia economy is clear mixed right now. The next event is JPY preliminary machine tool order. I China machine to order slow to the 3.4% is about half of last month.
Not a huge shock, but this might weigh on industrial outlooks, roughly neutral to mildly bearish for the yen. And let's go to the UK labour market. Wages came in below forecast as 5.3%.
That's still a strong wage growth, but the slowdown may reduce inflation pressure.
About a claimant count change, wow, 33.1k. People claim jobless benefit forecast was just around 9.5 thousand.
A spread chunk like that it varies for GBP. It suggests weakening employment conditions. To make even a unemployment rate, uh, unemployment rate has steadily at the 4.6% matching forecast.
But the trend is ticking upwards, something the POA wants to ignore if it keeps rising. And the Swiss consumer sentiment improved a bit to minus 37, still negative but slightly better.
It's a low impact number but reflects a slight uptick in optimism. Uh, the next event is Italian industrial production flat growth in Italy is 0% for industrial production.
Neutral, but it keeps the Eurozone slow recovery narrative alive.
A big jump here, Stantic confidence improved to minus 5.3 from minus 8.1.
Still negative, but less pessimism, and that could offer some euro support in early trades. The events at 5 p.m. USB and FIB Small Business Index. Finally, the US Small Business Index came in at 95.9, basically flat.
Steady sentiment, nothing too market moving here, but still a key house and check the US economy. So what numbers stood out to you most day?
Definitely the UK job data, that big claimant jump was a surprise. Also watching sentiment confidence as a euro sentiment signal.
Agree. Overall, we see missing signal across the board, so stay nimble for.
So thank you for joining us today and see you the next time on Market Watch Late.
Thank you, Raf and Helen, and thank you so much for joining us today, traders. It's been an absolute pleasure sharing the details of our feeders with you. We hope you're just as excited as we are about the opportunity to double your earning potential and growth with WeMasterTrade. If you haven't already, make sure to visit our website WeMasterTrade.com to choose your own package and take the next step in your trading journey. Don't forget to like, share, and subscribe so you don't miss future updates, promotions, and trading tips. Until next time, stay sharp, trade smart, and we'll see you at the top. Goodbye and happy trading.